Bongani, your headline earnings per share were up nicely, 17%, while your earnings per share were down 21%. What's the basic story behind those numbers?
The basic story is that the underlying business, which is more reflected by our core headline earnings per share, is up 5%. The reason the earnings per share are lower is because of the impairments which we have made in terms of our Canadian business and our US GTL. The reason for that is that the Canadian gas prices are much lower, and then in terms of the US GTL, at our Capital Markets Day, we disclosed that we will not be getting into that investment. So whatever costs we had incurred of $83 million on it residually, we had to impair that.
All right. Now, higher crude prices assisted your bottom line, but presumably you're constantly working to be sustainable regardless of what the oil price is doing.
Indeed. If you look at the higher oil price, it improved our results by 36%, both the oil price and in terms of our higher product prices. The rand, on the other hand, was the other way, 11% on the negative. So net, we were okay. But what's important for us is that we focus on what we can control. So in terms of our hedging program, both on currencies, on ethane, and on interest rates, that has been going very well because we've got rand hedges which are between 13 and 15 rand to the dollar, which is much higher than where the spot is. And in addition, in terms of the crude price, we fixed it at a bottom of $48 per barrel. So anything above that, we benefit from it. So our hedging programs have worked very well.
Okay, that's good stuff. And then in terms of your underlying businesses, are you seeing evidence of this synchronized economic growth that people are beginning to talk about?
Globally, in terms of our chemicals businesses, we're certainly seeing that. There is strong resilience, especially in our performance chemicals or specialty chemicals, with the margins holding. But obviously, if you convert them to dollars, it looks as if it's weaker. But in dollar terms, where we trade, it's strong. So it's strong on the chemicals business where we sell globally. However, where we sell locally in terms of liquid fuels, we have seen volumes coming down by 3% because people didn't travel as much in December as we anticipated because of all the uncertainty which was there in our economy. But I need to quickly add that there is increased enthusiasm about our country, not only the populace, including myself. We went to Davos and everybody's upbeat, and then we just need to do the right things and we'll prosper as a country.
Well, now you've come to that. What is it that needs to be done? Or in terms of how quickly does the new administration have to actually act and work, in order to take advantage of the current momentum? Because obviously, if there isn't evidence of all the nice talk that we've been hearing, it will be negative for us.
Yes, there is demonstrable evidence that our new President Ramaphosa has been acting very quickly on state capture, and I'm confident that in terms of what has been worrying business, which is mainly the policies. If I take the one on mining as an example, I have no doubt that that will be resolved within the next 6 months because there is evidence that there is an appetite to get things done. So. And then we as business will then need to follow it up with investment and improve the lives of our people.
And then just very quickly, you guys must be laughing all the way to the bank in terms of the tax overhaul in the United States. You're going to benefit from that.
Yeah, so in terms of business, Trump is good for us. so on a net basis, the return on our Lake Charles Chemical Project, the return will be up by 0.5% in our estimation, but half a percent of a lot is a lot. So we'll see benefits going forward. Thank you.
And then one of the things that you mentioned was that you're working towards divesting some of your assets to improve your cash flow and all of the rest of it. So what particular assets are you looking to dispose of?
So we have... That is the asset review program which we are referring to, and 70% of it is done. The key one which we have announced is our Canadian Shell assets, which we have incurred close to $2 billion of impairments in recent years, and that fundamentally doesn't fit our strategy. So we are exiting those, and we've appointed an advisor to go on with the sale.
All right. And then very lastly, you guys had to write off a fair bit on the Inzalo BE scheme. Mm-hmm. Why do you think the scheme wasn't as successful as one would have hoped? And how is the Khanyisa one going to be different in terms of you guys not having to lose out in the end?
Yes. In terms of the Inzalo scheme, it was premised on relying on the share price going up. And the share price normally does not follow the underlying performance of the company because all sorts of market issues come into play. And then, for instance, the low oil price. But with the Khanyisa, it's based on the underlying cash flows of the business, which is going to be based on Sasol, South Africa. And the businesses in there, our chemical business here, Synfuels, and which has very strongly cash generative. So I'm very confident that will be successful. As for Inzalo, we estimate that there will be a debt shortfall of close to 12 billion rand, which the company, not the shareholders, will have to fund. But we are more forward-looking into Khanyisa to enlighten us going forward.
Nompu Siziba speaking with the joint CEO of Samsung there, Bongani Nqwababa.